Welcome to Bitcoin Technical Analysis. Today I'm with George. How's it going, George?
Hey, how you doing?
I'm
Thanks
doing,
for having me on, and looking forward to the show today. Some exciting action out there.
yeah, definitely. So there's been a good amount of price action, as you can see on the chart. So, the price has, gone over the 270 mark clearly, and it seems to be staying over there. Now, we'll see what happens, but I think it's hitting some key levels. And as long as it stays above the to Keen Sin, that blue line on my chart, I think that it would just keep going up. Now, I think I guess that yesterday was the so-called pullback day, but I mean, there was some sell-off, but you can see on the day chart, it doesn't look that major, but it did chill out a little. So maybe that was it for now. I don't know. Let's see. But a lot of this is fueled by, what's going on, with people's reactions to the news, maybe because first of all, the European court said that Bitcoin transactions VAT does not apply, so value added tax. Some people are saying, oh, Bitcoin is tax free in the EU. Guys, that's not true. It's just VAT is just one kind of tax, but it is a big deal. The reason it's a big deal is because some countries were trying to say, Germany was trying to say, okay, when you change Bitcoin to fiat, that is a so-called special service and that their VAT applies. And other countries were trying to say it's kind of like a good you would buy. Like if you buy a candy bar or whatever online, and you got to pay VAT. So they said, no, that's not it. It's a means of, it's a lot of headlines are saying, oh, it's real money now. So let's see where that goes. Another headline is Second Market has been acquired by NASDAQ Private Market. So that is pretty interesting. Now, I believe NASDAQ Private Market was doing some stuff with blockchain technology, and they have said that they want to use the Bitcoin blockchain in the past. There's been a lot of discussion about that. Now they've acquired Second Market. And then the next thing that happened today, there's been a lot of things going on in all markets today, is that the European Central Bank decided not to raise interest rates. Big surprise there. And they said they're going to continue to buy bonds, and they signaled they'll throw even more money into the market if need be. So Draghi is ready to spend if he needs to keep this thing going. So George, what chart do you want to show us first? How's the dollar index and a few other things doing today?
Perfect segue into the dollar. So, this is something that we've been looking at for quite a while, and as you can see on the chart here, it kind of had a little fake out going below its 200-day, and it bounced back up. The real level has been like around this 93.30 level, which is that and the 94-ish level of the 200-day have been two major supports, and it never broke below that 93 level. Obviously, it had a head fake below, and now it's back up above its 50 and 100 as well on a sharp candle, and that's basically probably due to the fact that the ECB is going to continue to ease, and the Fed isn't, and the dollar's strong. And what's going on with that as well is that you're starting to hear chatter that December looks like it's going to be an interest rate rise. And it's interesting because the fact of the matter is that they're raising rates to normalize policy. This is different than trying to head off inflation, and has major ramifications for a lot of the commodity markets. For example, I have a chart of gold here. Gold has broken out in recent weeks out of this wedge pattern that was formed, but it's falling again today, and it's back below its 200-day. But what's interesting, though, about this is, while gold you would think would do well in an environment where there's a lot of easing going on, it won't do well if the Fed actually raises interest rates to normalize policy rather than head off inflation. And that goes for most commodities in general. Without inflationary pressures, commodities will not rise. So it's kind of counterintuitive. You would think that you're raising rates to choke off growth. Well, that's not happening, obviously. The Fed just wants to get off of zero. And this is still speculation, of course, but obviously the dollar has continued to be strong even with a lot of the talking out of the Fed about not raising, and the reason why is because maybe they will raise. And obviously, this has implications for the 10-year, all yields, the whole entire yield complex. But again, if the Fed does start to raise, you should see that this chart and many other charts along the whole entire term structure of bonds, so from short term all the way up to long term, will start to rise. But the 10-year is really the mother of all. And as you can see, here, and here, you get this triple bottom in this 1970 area, and it doesn't fall below. The RSI has never really gone into an oversold level on any of these moves, and is kind of hanging out in the 44 level. I mean, obviously these charts are really bad, and you wouldn't want to buy here, but you're seeing the MACD is starting to go into a positive rollover here, but it's still below its zero line. So again, I think this 1970 level seems to be like a bottom area, and I guess we're just going to have to play wait and see. Other markets, obviously, I've been looking at China as well. You had this big consolidation range. You got above the 50-day, which you've fallen through now, consolidation range. So you could say that the market itself has, maybe looking to bottom as well, but not very constructive chart here. I don't know. I wouldn't be buying or selling. I mean, the RSI is coming off a bit, and you have this MACD, but it's really no momentum. A lot of volume has come out of the Chinese market in recent weeks. Here's commodities, and obviously they're rolling over today as a result of the strong dollar, but they've been in a rollover mode for a couple of weeks now, or days now. And you get above the 50-day here, but then you fall right back through. The MACD is rolling over, and the RSI is coming off of some strength and back into a bear state as well. And finally, I'll talk a bit about Bitcoin. So here's a daily chart of Bitcoin, and obviously it's been very strong. You're seeing that the 50 and the 100 are crossing over. That's pretty positive. I had this chart up when the price was just above the 100-day, but now obviously it's above all of its EMAs, and it looks pretty strong here. You can look at the RSI; it's oversold again. But strength begets strength, and OBV, which I've been looking at, and we've been talking about this for a while with the wash trading and the volume washing, that you're getting more and more volume into the market. But that's been bullish, and it's been bullish ever since it started. It's kind of become the self-fulfilling prophecy of price moving up. However, I think we have to be cautious here as we get into major resistance around 290 to 300, which everyone has been talking about for quite a while. That's a big area. Another big area, if we happen to get above that, would be that 330 level, which was back in before the big dump at Bitstamp. I guess that was around December-ish. But I'm still skeptical of where this move goes to. Obviously, we're oversold here. We did get above that 270, as Theo said, and it's been a strong move since then. But I don't know. We'll wait and see what happens when I guess China wakes up. But we could easily go up and test that 290, 300 level very quickly and see what happens from there. Another interesting chart. While I know this isn't a good chart because it's not a logarithmic chart, you're seeing something here in the weekly, which is interesting. That's the 200-week, and it's above. The price is above the 200-week moving average. So that's kind of bullish as well. And you're seeing, obviously, if you're looking at the RSI, it's in a bullish place on the weekly as well. So you're seeing some things that are fairly bullish, I'd say. I mean, obviously, I'm still cynical. And if you look at the 50 and the 100-day moving averages and the 200-day, you're getting into that resistance level we're talking about, which is this 290 and 300 area. And that's another reason why it's major resistance. It goes back on the weekly EMAs as well. So breaking above that would be a pretty bullish move, but we need to get there first and see what happens. And then one other chart I'll look at is the S&P. So since we had that bottom and we've been talking about that, it looks like it's been a solid double bottom there, and we've risen higher. Today, you're seeing some really good action, getting up above the 200-day on, I guess, news out of Europe of easing, and just, I don't know, we could really just say it could be anything, but that the action is very bullish, and you're getting back into a place where you could actually think that we're going to test the old highs again, have this year-end rally. RSI is obviously looking really good here, and looks like it wants to go higher. MACD has been moving up really quick. And the other thing that you really had, which was an indicator that you should be leaning bullish on the S&P, is we talked about that. Well, I don't know if we actually talked about it or not, but the McClellan Index had a big volume surge in it, and you get this wide breadth thrust. Those are really bullish moves, and essentially you haven't seen those kind of moves in a really long time in the S&P, and they usually beget 6-12 months out bullish action. So I would expect a rally into the end of the year. And if we remain where we are today around this level, you're clearing some big overhead resistance. And then, you usually go up and try and test this 2080 area towards the 2100 area. So, I mean, things are overall in an interesting place with all markets as usual. But I guess it's really going to come down to what happens in the Fed meetings going forward. And I think the problem with a lot of the markets is that that's all that anyone is looking at and caring about. And everything is leaning towards what the Fed is going to do. So every time you hear chatter coming out one way or the other, it's going to move markets in other ways. But you also have this other thing going on, which is the rest of the world is in a major easing cycle. So it's hard to say, it's hard to think in that kind of an environment that you're going to have a really big downturn of any kind in a lot of markets, because central banks are active in propping up all over the place. And that's really all I have for today.
Okay, thanks.
Thank you.
Great. So another George, you're echoing. Okay. Another indicator is the scam indicator. There's a guy back on Twitter that is claiming to be an OTC trader. People, if you have someone contact you that says he'll buy your Bitcoins, OTC, then, sell them OTC somewhere else. But the last time this guy showed up is right before the price went from, I think, below 300 to 460. So at the end of last year. So maybe that's a signal. I was talking about that yesterday with
to the
people.
Moon.
Yeah, the last time that these kind of scams, scammers, they come around when they know something is up. Actually, a lot of times, so that could be an indicator.
Nothing like a good scam when the price is rising. That piques people's interest.
Yeah, I mean, it could be. I don't know. And then you have this the Russian Ponzi scheme thing that is openly a Ponzi scheme. I think all this stuff also contributes to the price. So,
well, I might go into my closet and dust off my moon boots.
Okay. All right. Well, thanks everyone for watching. Make sure to subscribe to the World Crypto Network. Give us a thumbs up and write your comments below. Talk to you next time.